This is the Stockwell Eldridge Show, giving you the real-time information you need to make educated decisions about buying and selling in the world-renowned Twin Cities. Now your hosts and real estate experts, Jason Stockwell and Don Eldridge.
Good morning, Minneapolis, St. Paul. This is Jason Stockwell with RE/MAX Results. You're listening to the Stockwell Eldridge Show every Sunday, 10 a.m. here on AM 1280 The Patriot. Today, if you're familiar, some of you may be familiar with the song S-O-L-O. Today, I will be riding solo as the host, and I have a wonderful guest with us, returning guest Jeff Peterson, talking a lot about money, taxes, 1031 exchanges, all kinds of things to help you and try to help you save money and keep your money, because there's a lot of things going on out there that are happening. And I'll read some of the statistics here that'll hopefully motivate you. I know I've been motivated lately to finally, after hearing about 1031s for the last, since 2003, finally do one. Or finally get a plan to do one down the road. So I've got a property that I'm finally going to move into and do that with. But first off, so Diane is out of town. She's enjoying the lovely lake life here in Minnesota, up at the lake. And Dawn is out ill today, so we wish her well. But first, I want to make sure that you out there listening, if you have a home for sale and it's not selling, or if you're hearing all the stuff in the news about how great the market is, don't take that at face value fully all the way, because it's always overhyped. Right now, real estate is so different than the stock market. The stock market, every day you see the numbers. In fact, every minute, isn't it calculated, Jeff? All the time, constant calculation.
Every millisecond, it just updates all the time.
Updates. You know exactly what you're up, down, where you're at. You know, you can get a snapshot view that instant of where you're at. Real estate, not that way. It's interesting being on the ground, seeing it happen and seeing things slow down a little bit, but we won't hear about it until November or September. We're a month to 2 months behind with data in the real estate market. And a lot of sellers out there are scratching their heads thinking, well, this is what I was told it would sell for. This is the pricing that I thought it would go for. And maybe they had an interview with an agent back in March or April or May. And we're down from there. We're a little slow from there. The activity isn't there. It's still okay. As John Colopy, my broker, would say, it's not bad, just different. So it's still overall good, but just make sure that if you do want to sell this year, you're doing the right things and they're pricing it right, because you got to entice those buyers. And so I've talked to a number of sellers over the last couple of weeks, and I compared it to piranhas, a tank of piranhas as the buyers in the springtime that haven't eaten, and you throw a couple of fish in there and it's a frenzy and they're all just going crazy. Now the piranhas aren't quite as hungry, or there might not be as many piranhas. So that's what we're dealing with. So call us or go to the website if you have any questions about your market evaluation. You can get that free on our website, which is tcrealestatehour.com, or you can call us at 651-400-0773. And that's the market update. So be aggressive on your pricing, I would say, and also on your presentation. Those are two things that you can really help out with your sale if your home is not selling. If you're a buyer, rates historically low still. That's what's kind of scratching heads. I have agents texting me. We're talking all the time. We're on LinkedIn. We're communicating. And the agent says, man, it's a tough conversation talking with a seller who said, hey, I should get this price. And you have to say, yeah, you would have gotten that price 6 months ago. Now we're a little bit lower. So not a massive amount. We're not talking about a recession or anything like that. We're just saying activity is a little lower. And hopefully, with the school starting here, we should have a little pickup here in September, October. We're hoping for that activity to be really good and clear up some of the houses that may still be on the market. But the sellers have heard all of the agents and everybody touting to get your home on the market. And they are now. And that's good. So we're finally filling that supply gap that we've had for such a long time, in my opinion anyway. Other people may completely differ, but I think what I'm seeing with the sellers right now and with the properties we have right now, it's a little bit slower. So you got to be smart about what you're doing in your marketing. So with that, and that's the market update. With that, I want to introduce Jeff Peterson here with CPEC 1031 and ask him. Jeff, welcome. First off,
Thank you. So great to be back on the show again. Thank you.
Jeff, you deal a lot. You talk a lot with mortgage lenders, I assume, right? Realtors, sellers. Any of that? Are you seeing any slowdown? Or is it still just in the maybe in the investor market, it might just be still just go, go, go. But what are you seeing?
My vantage point is kind of interesting because I'm working on deals that got put together 3-4 weeks ago. So I'm not feeling the real-time, on-the-ground experience that you have. And so my business has not been softening up at all. If anything, phones are still ringing off the hook. And my world is a little bit different than the average residential seller in that we're dealing with more commercial properties,
Yes.
duplexes, fourplexes, businesses that have their own properties. And it's a hustle. I'm going to tell you, people are really doing a lot of deals in that area. The little triplex owner is smartening up and saying, you know what, why should I manage a little triplex when I can have a 10-unit apartment? And so we're seeing huge demand for small apartment buildings, small commercial, mixed use where you got like a little retail underneath
Yes.
and commercial on top. That kind of product is just crazy hot. And I should say, I don't sell any real estate. I'm not a broker. I'm not a real estate agent. I'm really a facilitator for the 1031 exchanges. And the people that we see are very active right now.
Yeah, and that's all over in the commercial market. You look at the Business Weekly, you see it all the time. They're building more stuff. They're buying more land, tearing down buildings, and building more apartments, especially, and maybe some condos here shortly. So there's a lot of questions about how do you actually do an exchange. So let's say you've had a property. Let's say you're listing and you have a property that you've had for a long time, single family. I have a client in Richfield they're out of state. They have one house. They said it's just not worth it for us to have one property and the maintenance issues with that. And if you have 10, it might make more sense. But they're like, we're going to sell it and just move into something else. And I don't know if they're planning on exchanging or not. I ran that option by them, but I don't know if it's something that you have to plan ahead for. So if you're in a situation where maybe you have a property and you're thinking, I'll hold it through the winter. Next year, I might be a good time to maybe move it into something else. These topics and these questions will be great for you. We'll go through some of the main questions people have. These are some of the main questions that people have when they are doing a 1031 or if a 1031 is right for them. And I was hesitant for a long time. One reason you might be hesitant if you have a property, a rental property, and you want to sell it, and Jeff, correct me if I'm wrong here, but is you need if you're flipping homes, you may say you need the cash flow, right? Is that kind of the number one thing where people are like, I would like to hold it longer and exchange it later, but I need the constant flow, right?
The thing with flippers is they are real estate rich and cash poor. All of their cash, all of their capital, typically gets tied up in their project, their beloved flip project.
Yep.
And they need to sell in order to free up that capital to go out and do their next deal. Unfortunately, when you sell a flip property, a short-term hold that you bought primarily for resale purposes, you're not going to do it in the most tax-efficient way. Uncle Sam and the state of Minnesota are going to be your
partners
in the deals. Yeah, you didn't know you had partners, but you did. And they're going to be collecting their pound of flesh when you sell that property and make a profit. And it's taxed probably at the most inefficient way. It's short-term money, short-term gain money, and it's not the best way to sell property.
And if you don't need the cash flow, or if you have one you've had for a while, that's where you can plan ahead. Or how would you go about that? Let's say you're a flipper, and there's a lot of people in flipping is sometimes a negative term, but they're remodeling and selling and improving the property for a profit. The end buyer hopefully is happy with the product and is paying a fair market value for the property. That's That's the nature of that business. But let's say you're someone who's remodeling and selling homes, aka a flipper, and you say, "Hey, I do want to start thinking about a tax strategy." What would be a good plan then on that, Jeff? How would you go about that?
There's really two different ways to approach it. If you buy a property right, and they say you make money when you buy,
Yes.
not when you sell. So if you buy a property right, and you could rent it out as is without putting much money into it, maybe a good strategy is to buy that ugly duckling, don't fix it up. Instead, rent it out as is and hold it as an investment property for a year or two until you're ready to do your rehab project. Then pull your tenants out, get in there, put in new linoleum, new appliances, new paint, put the lipstick on the property, and get it ready to sell for the highest and best price. That way, when you do the rehab, you don't have to worry about the tenants coming in and scratching everything and roughing it up,
yes.
making it look renty again. You know what
Yep.
I mean? Other times you'll see people buy the house and it is in such bad shape that they have to do the rehab up front. But the risk is you're going to put a tenant in there and they're going to rough it up and make it look bad again. So what I see some people doing is they'll say to that tenant, "I bet you'd like to be a homeowner someday. And what I'm willing to do in my lease is give you a fixed purchase price at the end of the 24-month lease. If you abide by all the terms and conditions of the lease and you pay your rent on time, I'm going to sell the property to you at X price. And furthermore, I'm going to take a portion of your rent, say $50 a month, every month, and I'm going to set that money aside and apply it towards your closing costs when you close on the property." So after 24 months of saving $50 a month, now they've got a little bit of a nest egg that they can use for their down payment or for their loan origination fees. But by positioning your tenant to eventually be your buyer, a psychological switch goes off in that tenant's head. And guess what? When they're chopping carrots, they're not chopping them on your brand new countertops. They're using, a cutting board, and they're treating the property like they're going to own it.
Yep, that's the key. That's a great tip for you if you're thinking of saving some money on taxes. Thanks, Jeff Peterson with CPEC. We'll be back with more. CPEC 1031, we'll have his information on Facebook. If you want to call Jeff, you always can. 612-643-1031. I like the ending of that one, Jeff. We'll be back with more.